Hello, my friends across the pond. This is Miss Schneider, Chief Strategist of MarketGauge.com, coming to you with your weekly video in a time where there's absolutely nothing to report. There's nothing going on. Oh, well, that was April Fool's a few days later. We actually have so much going on, so we're going to start here by looking at two reasons why the gold market's going up. One is fear and flight to safety, based on the fact that the U.S. JOLTS report came out this morning showing that there are actually less jobs available than there were. That was a surprise, number one. And number two is our dear Jamie Dimon came out and said that the issues in the banking situation are not over. And so the market has sort of been in a very interesting spot in terms of the U.S. market. Everything rallied pretty much close to the 23-month, I've pointed this out to you before, the 2-year business cycle, where it hit a wall of resistance. Looked like NASDAQ was going to go through potentially first. So it goes back to the same concerns that about the Fed. Are they going to pause or pivot? Are they going to go up another 0.25% and then pause or pivot? What are they going to choose to focus on? Contracting economic numbers like ISM, OPEC Plus, which is now actually lowering the price of oil, some inflationary indicators that we're still seeing around, particularly in food, or are they, what are they going to do? Are they going to do nothing and just hope that things resolve? So this is why one of the reasons is you're looking at the gold chart here. And those of you who've been listening to me every week know that I have been very bullish gold. I started out this year saying that this was probably going to be the best trade on the board. So the question is, where is gold going from here? Now, what's so interesting is if we take a look at a monthly chart, the monthly chart has a classic inverted head and shoulders bottom. Some people call it a cup and handle. We go back and look, there has not been a close on a monthly basis higher than 185.43. And so right now we're trading above that, but we still have a long way to go in April. I would say a new monthly close would certainly mean that if we just took a measured move of, let's say, 100 to, let's make a rough neckline of around 190, that's about a $90 move. So if you take 90 and you add it to 190, you're looking at 280, or probably somewhere between $2,600 and $3,000 an ounce, depending on how optimistic everybody gets about crowding into this trade. So this is something that's to keep an eye on. The dollar, of course, is declining. We'll take a look at that as well. And even though we have a jobs report coming out and the labor market could remain strong, that also would present as a further conundrum for the Fed, because we have a rising labor market, so they certainly would feel more bold about rates, but yet we still see things falling apart around us. So I don't think a strong jobs number will be good for the market. I think it'll actually be bad for the market, but it also means that more people working, meaning they have more money to spend, meaning inflation, which people think is over, may not be so over. So before we head over to the silver chart, I also want to show the US dollar here. The US dollar, obviously, look at this red line. This is our daily chart. And you can see, if I blow this up, on our daily chart, what we do is we look at calendar ranges. We like a 1-month calendar range, but the 6-month calendar range seems to be extremely important in terms of setting the tone for 6 months. In this case, it would be January to July. And we're breaking down under the Bollinger Band here in our real motion momentum indicator, which could mean that we're going to go much lower, or it could mean that we won't necessarily take out this 101. And instead, what we'll see is a mean reversion and the dollar would pop. But right now, with all the news coming out anti the dollar and the concerns about China, Russia, and the Middle East pricing things more in yuan, I would certainly not be too optimistic about the dollar, and I would think that any bounce would probably be a sellable bounce at this point. But of course, this is also emboldening the commodities to a great deal. So let's move over to a silver chart. And particularly, I want to look at the silver versus the gold. And that is something that we've also talked about. So here is a weekly chart of silver. And I thought a weekly chart would be interesting to look at to get a further perspective. I mean, even though we've cleared all the highs that we saw in the beginning of 2023, we're now going back to the highs of 2022, where we can see just the SLV alone is trading up. At that point, it was around 24.25 in terms of per ounce. It was about $25 per ounce of silver. So essentially what we have right now is a nice breakout on the weekly basis. It's outperforming the gold. I showed you all last week that on a daily basis it was already outperforming the gold. So we anticipated, and hopefully you did and made some money, in the silver market rising. Now, if we're going to use this sort of Bollinger Band matched with what I just showed you on a weekly chart, we could be heading into some resistance. What I find interesting is also here in terms of the real motion, just like I showed you in the dollar, we broke the bottom Bollinger Band, which could create a mean reversion and a little pop in the dollar. It would certainly be no coincidence at the same time as we got a pop over the Bollinger Band in our momentum indicator, should it break back down under the Bollinger Band, that we would have a slight mean reversion in silver, which would create a little bit of a dip. I mean, we definitely have a huge move happening as I'm speaking to you, so any kind of correction would certainly not be any kind of surprise. Now, what is interesting is with the declining dollar, and I believe last week I showed you the euro versus the USD, and I said that over 109, it would time to start being concerned about the dollar, and we'll take a look at that momentarily. But some of the European markets are doing well, and we'll go back to this chart in a moment. This is the Germany chart, ETF DAX. But if we look at Europe in general, we have quant models at Market Gauge that trade based on our proprietary indicators using trend strength. And we have been long VGK, which is the Europe ETF. And you can see, especially as we look at it versus the SPY, that it was underperforming, slightly started to outperform, and now has gone back to actually slightly outperforming again. So what's interesting is that this year a lot of traders started out putting money into more global ETFs, and now with everything that's going on with the banking issues, etc., even if they resolve, even if the energy doesn't go up much more, it looks right now that the trend is more bullish for the actual Vanguard Europe ETF. And if we take a look specifically at DAX, you can see here that this too is in a situation where it's above the 50-day moving average. Let's blow that back out again. It's right into the resistance here at the Bollinger Band. It is also outperforming the SPY. And then in terms of the momentum indicators, if we just blow that up, you can see that this too, just like the European one, is above the 50-day moving average, but also running into some Bollinger Band resistance. So what's so interesting is what you have to ask, what would be the next sort of emerging trend to come out? And we've talked a lot about oil, but I think it's time for us to take a fresh look at oil, because last week I had mentioned that it needed to get through $82 a barrel, and you can see that that has happened just as of yesterday when it cleared. And now, of course, it's run into some resistance here up at the highs, which we had right back here at 86.75 in the early part of March, and today's high is 86.44. So, you know, these charts make a big difference, but nonetheless, we just went, and this is a daily chart, into a phase that is back into a cautious phase after being in a recuperation phase after being in a bearish phase, trading under the 50 and the 200, now back above the 50. So if it is indeed in a recuperation phase, and by the way, outperforming the SPY, and also starting to really show some momentum here on the real motion indicator, and we take out this high, let's call it $87 a barrel next. I was looking somewhere between over 82, so certainly the trend is up right now. Over 85 would be stronger. We would run into some areas of resistance here at the 200-day moving average. But over that, I don't really think there's much to stop oil from going back up, really back to around 100 to 104 dollars a barrel. And of course, that will have its own impacts on the entire market. US and global. So that's something to keep an eye on. Now let's just take a very quick look here at the Euro USD. So for consistency of what I showed you guys last week, and you can see right now that we got to that 109. So that was the area I was looking at right now for a real move potentially for the euro to start really taking over the dollar at this point. In terms of an actual pick, if we just move a little bit away with the TLTs, and I think it's really important to look at the long bonds here because that's going to kind of relay what the sentiment is in terms of risk, is first of all, the TLTs went back to underperforming the SPY. They're now slightly underperforming. If that takes over, that's information. They're clearing once again the 200-day moving average. Momentum is starting to increase over the Bollinger Band. And if we take a look at this at the longer term, what we're really saying is this could be good for certain sectors, which is why U.S. utilities are doing well. So I just wanted to give you one name that I really like that has been underperforming, that's in the utility camp as well as also in electricity and energy, and this is Dominion Energy. It's an electric company really in the east coast of the US, but after having a nice reversal pattern, still underperforming. If this can clear back over the 50-day moving average, let's say over 57 for a couple of days, I think you could have a situation where you might see the utility area, which is also a flight to safety, given potential lower yields, and in the energy sector, make a nice run. Let's maybe go back up to 64, possibly at least go up to test the 200-day moving average at 67.50. So just to sum up, yeah, the gold is really reflecting just a lot of anxiety, not just here, obviously everywhere, but particularly here in the US. The silver gold is showing inflationary. The oil coming back can certainly put a feather in the cap of inflation. At the same time, the Fed is really stuck and the dollar is declining. So it's opportunity. Always remember that. Try not to get too negative. And thanks so much for watching, and bye for now.